So, big news today. The Fed is raising interest rates by 0.5% and the markets just exploded. Decentralized. Welcome to Everything Currency. Today I'm going to talk to you about this interest rate hike, how the markets exploded, what this means for Bitcoin, but most importantly, what is an interest rate hike? So a lot of people have been hearing about that term. They don't even know really what's going on here. I'm going to get you all up to speed in this video, and I'm going to talk about what traditionally has had, not even what traditionally, what has historically happened in the past when the Fed raises interest rates. So if you're excited about that, like the video, subscribe to the channel if you're not subscribed to the channel, and let's just get right into it. So we have this news. Fed raises interest rates by 0.5%, the largest move since 2000, and the markets have responded with a bunch of greenery over here. So going to the price of the SPX, we see it dipped yesterday, and then it started moving yesterday, and it had a nice pump today, a nice 3% pump in the stock market today, responding nicely to the news. And then Bitcoin also had a nice pump going on today. Now these pumps are basically, in my opinion, just bearish retest. So this price will come up to here and retest this level of like 41k, and if it doesn't even make it there, then of course it's even more bearish. But it's still below the 200 EMA and the 200 MA, which is this red line and this yellow line right here. Below those lines is bearish to me. That's why I have this big green line right here sitting at the first level, starting to get a little bit more bullish. But we spiked today on that news, and then the SPX today looks just like Bitcoin, also spiked today on that news. And the reason why it spiked is because people were expecting the Fed to come out and say, we're going to raise the rates by 0.75%. Well, they came out about a month ago, 2 months ago, and said, hey, we're going to raise it by 0.5%. So I'm not sure why the market was speculating on something higher than that, but nonetheless, they're saying that they're surprised, and the price is going up right now because of that. This also had an effect on the DXY. As soon as the news was announced, the DXY started to tank and it started to come back down. Remember, this is the dollar versus a basket of other currencies, and when this thing starts going down, it ends up being an indicator that asset prices are having a pretty nice green time in this market. So the Fed raises interest rates. It affects the markets so crazy. You see all these big volatility things happen. So what exactly is it in the first place? So coming right here to investopedia.com, one of my favorite websites, it says, what is the federal what is the federal funds rate? So the federal funds rate refers to the target interest rate set by the Federal Open Market Committee. The target is the rate in which the Fed suggests that commercial banks borrow and lend their FX reserves to each other overnight. That is a mouthful, but let me just explain a little bit more right here. It says, when the FOMC, which consists of seven governors of the Federal Reserve Board and 5 of the Federal Reserve Bank presidents, sets the target fund rate, the rate at which banks borrow from and lend to each other overnight has a ripple effect across the entire U.S. economy, including U.S. stocks and blah, 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 blah. So the main thing you need to know about this does not have to do with me and you. This is the rate in which banks lend their excess cash to each other overnight to fill their obligations, and the Federal Reserve has a target rate that they give these banks to say, hey, it should be within this rate. It is not a set in stone rate, it is just a target rate. To basically, this is how they're telling the banks, look, this, you guys got to hit this target rate so we can keep everything afloat. And it's kind of, regulators, they're regulating it. So they use the fund rate in order to control inflation, and they try to get people to do different things. Now, one of the main ways that they use this news to control the market is by playing on people's psychology, right? Because they understand that this market and all financials markets really have a lot to do with people's psychology. That's why we look at the psychology of the market chart. That's why we look at the fear and greed index. And I've heard the Federal Reserve say before that they know that just saying things gets the market to move in whatever direction that they want it to move. So I know that they use that to their advantage in order to control the inflation and help the economy and all the stuff that they claim to be doing over there at the Federal Reserve. So that's what's going on with the interest rates. This is just the rates that banks can lend their money back and forth to each other overnight. So it says right here, the Federal Reserve increases the federal funds rate in order to control inflation. By increasing the federal funds rate, the Federal Reserve is effectively attempting to shrink the supply of money available for making purchases. So, when the bank doesn't have money to cover their obligations and they can't borrow it, or it's more expensive to borrow it, then they have to raise interest rates in other places. Borrowing money for average people like me and you gets a little bit more difficult because the bank will have to raise interest rates to cover their own ass instead of having cheap money so that they can borrow. So this is a chart of the Federal Reserve rates. We can see we've been like close to zero for a pretty long time, and this has a pretty interesting effect on the market. Like we've seen the markets move pretty largely this morning because of the announcement from the Fed. But found this article right here that says why stock market investors should cheer Fed rate hikes and not fear them. And I just want to bring you down to this chart right here, and everything is explained on this chart. It says stocks and interest rates usually trend in the same direction over the long term. So you have this black line right here, which is the price of the S&P 500, and then you have this blue line right here, which is the Fed fund targeting rate. And you can see when this thing is down, you see the markets kind of went parabolic for a pretty long time. The first time they raised them, we had a little dip probably for that week, and then it just continued up from there. Now this is a long-term chart. This is from 93 to 2000, I believe, or 93, yeah, about 93 to 2016 actually. But what's interesting about this chart is this here. When they raised rates back here in 93 up until here, we've seen the price went up all the way until here, and then when they lowered rates, that's when prices started going down a little bit, and then prices were down. And then when they raised them again, we've seen price started to have a nice uptick in price, and when they went sideways, there was a double top, and then it went down and rates went all the way down along with it. Now ever since rates have been close to zero, like at 0.5 or 0.25, whatever they've been at for the last 15 years, the market has just been going crazy. And I think that's why a lot of people are scared of these hikes, because this is what we've been seeing for the last 10 years. But historically, raising these interest rates doesn't really affect the stock market in that negative of a way. Now it's not as bullish as being zero for a long time, of course. Like if you look over here, it was zero for this period of time, and then it was super bullish, and over here it was going up, and it wasn't as bullish. But basically you can see that the interest rates is kind of just something that's used to sway people's sentiment in the market, because when you look at the long term of what actually ends up happening over the long term, they kind of trend in the same direction. Now this is not the same as what we're going through right now. Right now we have a war looming. Right now they have QE. Right now we have this COVID stimulus and all this money that they printed that's never happened before. So we still have to figure all that stuff out. But in terms of interest rates, I don't really feel like there's much to worry about as far as things getting super dumpy because of that reason. So let me know what you guys think about the interest rates. I know there's people who are deeper into finance and deeper into traditional finance than me, who've been here longer than me, who can give me some insights on how they feel about this data that I discovered up here on the internet, on the interwebs, in the last couple of days. So before we get out of here right now, I want to talk to you guys about a trade that I am in. Now I am in this coin right here called Sand. Now some people had asked me about finding support and resistance on these charts, and the easiest way to do it is this: go to the daily and just look at levels where you see the price actually tap. So I take my cursor, you see these dotted lines, and then you can see that it touches here, it touched here, it touched here, it touched there, and then when it broke below that level, things got really dippy for it. So I'll go ahead and get myself a horizontal line right here, and I'll put it right at this level, and I'll say I'm thinking that Sand might go to that level if it continues to get parabolic. And it's also lining up a little bit with the 34 moving average on that daily chart right there. So take a look at sand. If you're watching it right now, these charts are looking pretty bearish. Everything is below the 200, the 34 and the 200 EMA. So I'm just looking for this bearish retest right here for a nice 30-40% gain out of sand. So like the video, subscribe to the channel if you're not subscribed to the channel. RIP to crypto roots. Think positive and positive things will happen. Make sure you get some sun on your body. It is good for you. Till next time, peace.